Hey everyone, I hope you guys are having a great day. Today we're looking into AMD and we're going to see if after being crushed for about 6 months now and losing 41% of its value, if AMD looks attractive at these current valuations, looking at the prospects of growth. Alright, so as you guys know, the first thing I like to look at are the sales of the company, how they're growing, and are the free cash flow following the same trend. Here we can clearly see how well and consistent the revenue has been growing, and we can see that free cash flows are also increasing consistently in the same manner. So this is the first thing I like to check first. Now here, this is the last earnings report of AMD, and this is a breakdown of the revenue between computing and graphics and enterprise, embedded, and semi-customs. What is computer and graphics? It's basically the CPUs, the GPUs, the components of the computer, whereas enterprise, embedded, and semi-customs are more focused towards data center and cloud computing. Alright, so for the first segment, we can see that the revenue grew from 2020 to 2021 from $6.4 billion to $9.3 billion, which represents an increase of 45% growth year over year in the revenue. That's really high growth. But the part that I really want to focus on is the second one, the second segment, where it grew from $3.3 billion to $7.1 billion year over year. That's an increase of about 113%, which is really explosive revenue growth. Okay, now here, as you guys remember, AMD acquired Xilinx recently, and here it says the deal, which has been valued at $35 billion would allow AMD to further compete with other firms in supplying chips for data centers, particularly cloud computing and machine learning activities. This is one of the parts that's really boosting the revenues towards these data centers and cloud computing, and we can even see it here how much it's been growing since really the beginning of 2020. This really segment has been really exploding. And honestly guys, I wouldn't even be surprised to see this segment of the company keep on growing for the next 5 to 10 years. Alright, so just so you guys understand better, these are AMD's featured partners concerning the cloud computing segment. So we have Amazon Web Service, we have Microsoft Azure, Google Cloud, and IBM Cloud. These are big companies, and they're growing their cloud segment really fast as well. And again, just to be clear, what AMD basically does, if we choose Amazon, for example, web service, we can see that AMD is creating a specific processor so that it optimizes the cloud services provided by Amazon. This is the kind of relationship it has with these big companies. And when I say that these big companies that we just saw here are really growing their cloud segment, don't take my word for it, okay? Alright, so here we have both the breakdown of Google and Amazon's revenue. And if we focus more on the cloud part, we can see that Google Cloud increased its revenue of about 32% year over year. And for Amazon Web Service, it grew about 27% year over year. These are indeed growing pretty fast. And what is to understand here is that if these segments of these big companies are growing, the fact that AMD is partnered with them, it's going to have a big impact on AMD's growth. And we already saw it earlier that segment of AMD is growing about 113%. Alright, so the second thing I have to look at is the profitability. And right away, we can see that the gross margin is sitting around 48%, which is pretty average. The operating margin is at 22%, the net margin is at 19%, and the free cash flow margin is also at around 19%. And what's good to see here is that first, the free cash flow are increasing pretty consistently in the past 10 years. And we can see also that the operating margin has been growing consistently in the past years. The second thing is that the free cash flow as a percentage of earnings is 101%, which means that most of the earnings the company is bringing in is already in free cash flows. So this is pretty good to see. Alright, so if we quickly look into the financial health, we can see that the current ratio is sitting at 2, which is pretty good. Intangibles at a percentage of total assets is at 12%, so the company still has some intangible or goodwill in its balance sheet. The shares are decreasing very slightly, but still it's pretty good. It means that there's no dilution right now. It's good to see for investors. The big part here is that AMD is currently sitting on $3.6 billion of cash, and its total debt is only $313 million. So literally AMD could just do this, and the next day it would still be sitting on $3.3 billion of cash and no debt. So that's very good to see, honestly. Alright, so here we can see that first the return on invested capital is almost at 60%, return on equity 42%, and return on asset 25%. So AMD is investing its capital pretty efficiently. Now before we compare AMD with Nvidia, Intel, and Micron, there's just one quick red flag that I saw. So here we can see the insiders have been selling the stock in the past months. As you guys know, there could be many reasons why an investor would sell stock, but there's only one good reason why they would buy it, right? But in this case, all the transactions are sales. So this is why this could be a red flag for me. Nevertheless, let's continue with the analysis. Alright, so now we're going to see where AMD currently stands compared to its main competitors. So if we first look at the 5-year compounded annual growth rate of the revenue, we can see that both AMD and Nvidia are growing at a very fast pace. We can see that Intel is more of a mature company, not really growing anymore, and Micron is a bit in the between. Now for the net profit margin, we can see that Nvidia is clearly winning with a 36% net profit margin, and AMD is really lagging behind on that aspect. It's under the average of 27% for the competitors. Now if you look at the current ratio, we can see that yes, Nvidia is at 6.65, but all the others too are around 2 and 3. And Nvidia is a bit of the outlier here, and the fact that it's such a high current ratio, it even tells me that they're maybe not using their current assets as efficiently. Nevertheless, there's really no red flags in any of them for the current ratio, in my opinion. For the valuation, we can see that both the two fastest growing companies are also the ones with the highest PE, which makes sense. But remember guys, it is always possible to overpay for growth. And in this case, I do think that both AMD and Nvidia are pretty expensive. Even if AMD looks a bit cheaper than Nvidia, they both overall for me look still expensive. Just a quick note guys, Micron really looks like an outlier here. And if you look at both the PE and the price to free cash flow, you can see that they're both lower than Intel, while Micron is literally growing more than 3 times faster than Intel. Okay, if you also look at the net profit margin, it's sitting almost at 29%, which is only second to Nvidia. It's also higher than the average. And if you look at the current ratio, it's at 3.11, which is really good. So honestly guys, I think Micron is pretty interesting and worth looking into. If you guys want me to make a video about Micron, let me know in the comments. This was it for this video guys. If you like this content, please subscribe. It really helps the channel, and I'll see you on the next one.